Now, by and large, when you buy a truck, trailer, all that type of stuff, it is a fixed interest rate. And now, even though rates are going up and prices are going up, in the end, you could be actually getting a much better deal if you lock in your rate right now.
Welcome to Stream, a trucktractortrailer.com production. My name is Zach Miller. I'm your host, and I'm honored to be joined again by Andrew Johnston, who is one of the co-founders of TrueCore Capital. Andrew, welcome. Thanks for joining us today.
Yeah, pleasure to be back.
So, this is really interesting because you and I are pretty young people. I am a little bit older. I have to say, I have to out myself there. But the point is, you and I are both under 40 years old. So why do I bring that up? Because we are seeing the highest inflation that we have in 40 years. So in our lifetime, Andrew, this is the highest level of inflation. So let's talk through that. Let's talk what that level of inflation means for trucking, for truck prices, really for the industry at large.
Yeah, I mean, it's super multifaceted. In general, you go to the grocery store, things are going up. You go to the gas station, things are going up. But when you talk about trucking, pretty much everything related to trucking is going up. So, I mean, let's start with the obvious one, truck prices.
Yep.
I think anybody listening to this podcast that is interested or has bought a truck in recent history has seen that things have gone up. 2016's going for 50, 60, 70K or now going for 90K.
Oh, yeah.
I think recently I saw 2020 or come through my desk, a 2020 that was coming through at 220K. I mean, that in and of itself is astounding. I think in most places in the United States, that's a small house, right? Or even a large house.
Yeah.
But now you associate that with gasoline, you associate that with other financial products. It gets the dollars and cents are racking up for most of the industry.
So now we have the inflation part of it, right? And then the second part of that is, well, the Fed is going to raise the interest rates. And so some of us in the industry might be dealing with sort of a two-pronged crunch there with high inflation and then increased interest rates. So let's talk though about some of those prices you mentioned, right? Some of those really high prices, but people still need to buy assets. People need, freight needs to move. Old trucks are breaking down. They have to be replaced. What do you advise for people who they need to buy, but they have their concerns about maybe the interest rates, maybe the price in general? What do they need to know?
Okay. Yeah, I mean, in general, you just need to be careful about who you're working with and the type of contracts that you're entering at this point. It's becoming more and more pertinent to start paying a little bit more attention. I know there's a lot of banks out there, local credit unions that do adjustable rates on their equipment loans and equipment leases. For example, we did a loan probably a year or so ago that was the interest rate was prime plus something, prime plus a quarter. But prime is set by the Fed. So that person, they agree to have an adjustable interest rate. Now, by and large, when you buy a truck, trailer, all that type of stuff, it is a fixed interest rate. And now, even though rates are going up and prices are going up, in the end, you could be actually getting a much better deal if you lock in your rate right now.
I think that's exactly it. So it's not so. Yes, there's sticker shock, but you have to look deeper at the price because the price may not be the problem if you get the good rate. If you get the rate that works that you need from a lender like TrueCore, of course, you could very much come out ahead of this.
Right. Well, I mean, you have to think about it kind of like a traffic jam.
Right.
Things happen, everybody gets piled up here, and then the result happens. So things are happening, the pileup is starting, but we haven't really seen the repercussions yet. Most lenders, I mean, you see media all the time saying, "Oh, our rates are now at 3.25, our rates are now 3.5," essentially promulgating that they have the lower rates and that they're continuing to lower the rates. but they haven't experienced the Fed raising the rates on them, and your local lender, your local credit union, your local alternative lender will have their cost of capital going up in their secondary market, which is going to bleed into the consumer. So that being said, if you lock in a nice little approval today, get in a truck that is a fixed rate, a year from now, 2 years from now, your 6% interest rate that you got and you're super happy about could easily be an 8 or 9.
Exactly. What have you been hearing too in terms of the supply? Because I just, for me, I think towards the very end of 2021 and the very beginning of 2022, I heard a lot of optimism that things were going to start to flow, towards end of Q1, beginning of Q2. That conversation has ceased pretty quickly, I would say. And now I am hearing, unfortunately, a continued sort of supply crunch for 2022. Are you hearing something similar?
I've noticed that some dealer networks are more affected than others. Basically, how connected you are overseas, how good was your supply chain, like it all kind of plays a factor. But by and large, I would say that it is still going to be an issue probably until 2023. I mean, we have more than a few people that wanted to buy a truck new, have placed their deposit, and there's one example that I'm thinking of that their truck was supposed to be done in January, then in February, then in March, and now, I mean, honestly, I would estimate probably not until July or August for that one to go through.
I heard from a pretty mid-sized fleet up in the Northeast that they placed 2 separate orders last year. The second order they placed actually came last month, I believe. The first order it's still TBD. So now that's when they're looking at the secondary market, just like to plug those holes because they don't know when they're going to come. I imagine that's fleets all across the country.
Right. I heard something very interesting, probably that will interest everybody, but I have a few friends that work at consumer auto dealerships. Specifically, I was at a BMW dealership, and they had mentioned that inventory is starting to come in, but because of the semiconductor issue and the chips and all of that some of the goodies aren't in the car. So these BMWs, these nice trucks, don't have they have levered recliners instead of the actual the auto recliners, or maybe some of the windows have to get rolled down. I mean, that's kind of extreme, but that is happening, that these little goodies, and to extend that into the trucking realm, I'm sure there's plenty of things within the Class 8 vehicles that could get skipped on. So again, got to be careful, got to make sure you're getting a quality product.
Well, now we're talking about something really interesting too, because so many of them, so many people who look to buy are, you're talking about fleets, you're talking about big safety initiatives, safety and emission standards, frankly, in many places. And all of a sudden, when you look at something like that, it's like, oh, geez, I really should just get a 2017, 2018 and ride it as long as I need to, because if you're going to spend, what are we talking about now? 350, 400,000 even on a truck, and it doesn't even have all the features you need. I mean, now we're just talking about insanity. It's like, right. You have to bite the bullet on maybe some of these inflationary prices on the used market, and just make sure the truck is safe and inspected.
Right.
But now all of a sudden, I think that changes the game for people.